We warmly welcome the boys and girls for the subject of money and banking. I am Anandarat Nayak, coordinator of the subject. Since I am the coordinator of the subject today, I have to say a few things, few important things on this subject in the introduction part. Right. Although I am the coordinator of the subject, some sessions are conducted by Amanda Miss, and rest of the course outline is conducted by myself. But the practice what we had in the past is the certain sessions, certain parts have been conducted by me and our lecturers in the department, and rest of the course outline has been conducted by central bank practitioner in central bank. But today we have a little bit doubt whether we will be able to conduct this workshop due to the coronavirus. But still, I am planning to have this workshop if the government effort on mitigating this coronavirus is succeeded. If I can't organize this workshop, I am planning to have a significant number of the guest lectures on money and banking because the way of implementing monetary policy by the monetary practitioners, central bank practitioners, can explain clearly based on their experiences. So, the part of this subject, part of this course outline will be conducted by me and my lecturers in the department. Probably the rest of the course outline will be conducted by the officers in central bank. The students were given a deep understanding on monetary theories in third year under the subject of monetary economics. The purpose of designing money and banking is just to give the practical understanding on the way of implementing monetary policies with special reference to Sri Lanka. Today, implementing the monetary policy is not easy. Central bankers have the spectrum of problems, the practical issues. By the act and by the definitions, by the objective defined by the central bank, actually they can consider only monetary stability or economic stability. Though economic stability is taken into account by central bank officers as their objectives, the general people of the country are expecting development role even from the central bank. Therefore, always there is little bit gap or conflict between the role of central bank and the objectives of general people. So likewise, today implementing this policy is not easy. The central bank has to basically concentrate on how economic stability can be achieved while giving their concentration on economic growth and development as well. Therefore, so by this subject, basically, we have to have a very comprehensive, the broad discussion on how central bank can achieve these objectives, how central bank can regulate financial institutions in Sri Lanka, and how central bank can face for future challenges. So likewise, so we have to have a very comprehensive, broad discussion in this subject. So finally, I would like to request all my dear boys and girls, please give your fullest support, fullest commitment for Amanda Miss. The initial part will be conducted by her, and you can get the great experience. Time to time, I am also participating. Before I'm leaving, I have to simply explain the evaluation part. 70 marks, if I correct, 70 marks have been allocated for your final exam. and 15 marks have been allocated for journal paper review in tutorial sessions. And so another 15 marks have been allocated for your group assignment. Actually, in this time, we had to change our evaluation methodology. The last time, the 15 marks were given on the performance in the workshop. Since there's a doubt in conducting central bank workshop as it is, anyway, we are planning to have. Actually, in this time, we have a little the breakup of these marks. Actually, just we have to forget about the marks which have been allocated for the workshop. Right, now I would like to invite Amanda Miss to continue this session. So time to time, as I said, I'm also participating. So get a good experience, right? So have a good day.
Okay. So also explain about the grading procedure. I will elaborate a bit more on that. Here, the first part, group assignment, 15 marks we have been allocated for that. That is actually a critical review on the monetary policy implementation of given countries. In the course outline, we already uploaded that in LMS. I hope you all downloaded it already. So you can refer there. In the group assignment, we expect you to do a critical review on the monetary policy implementation of the central banks of given countries, particularly USA, UK, and India, New Zealand. So there, you are supposed to compare and contrast the monetary policies, whether they have been able to meet their objectives, whether they have succeeded, or whether they have failed in meeting objective, likewise. So all these further instructions, guidelines will be provided to you upon a tutorial class. I will notify you all the things later. If I briefly, in a nutshell, introduce the journal paper review also, that is also a group assignment. We will be allocating for you into groups after we receive the final student list. Then the same group as the previous assignment, you can do a journal paper review. There again, you can score 15 marks. That journal paper review, we will be allocating journal papers separately for each group. There you have to critically examine the overview, the scope and the objective of that journal paper, the findings and the contribution of the paper to the literature. So finally, from the final examination, you can score out of 70 marks. So that is the grading procedure of this course. Basically, today we are just discussing the fundamentals, very basics of the course unit, why we have to study this course and how the central bank originated or established in Sri Lanka, then what is the monetary policy, its tools, goals, objectives, likewise. And finally, we will be discussing the functions of central bank. Website. You can see, maybe you are familiar with such type of news. There are some of the headlines that I have highlighted. The central bank keeps policy rate steady, Sri Lanka central bank cuts the interest rate, monetary leaves policy interest rate unchanged. Likewise, you have come across this type of headline, news headline in the television or some social media platform. What do you feel? Do you think whether there's any impact from this type of central bank announcement to day-to-day life of you? Or else, do you think that these announcements are totally irrelevant to you? What do you think? Now here they say, central bank keeps policy rate steady. First of all, tell me, what is this policy rate? Now, you can see this, some of the news articles or the news headlines that we used to refer some of central bank announcement. Yes, it says central bank keeps policy rate steady. So what is meant by that? First of all, tell me, what is the policy rate? That is the interest rate selected by the central bank to influence the other interest rate. In Sri Lankan context, normally we facility rate, standing deposit facility rate, and the bank rate. These are the three rates that we use normally as policy rate. Among those three, most of the time we use this standing lending facility rate and standing deposit facility rate as the policy rate. So central bank select these rates and they announce that they are going to increase this interest rate or they are going to reduce this interest rate. Accordingly, as rational students, you all are university graduates, undergraduates. So you should be able to have an understanding if central bank announces such decision, whether there is an impact or influence on this decision to your day-to-day life. Can there be an impact? What do you think? Suppose that you are going to apply for an automobile loan, that you are going to purchase your very own first vehicle. Then suddenly central bank announces that they are going to increase the policy rate. Then what will be your reaction? Are you going to apply that loan? No, right? Because if the policy rate is increased by the central bank, it will followed by an increase in the market lending rate as well. That means if the central bank increases the interest rate, it will be adopted by the commercial banks as well. So at that time, applying a loan will be more costlier for you. Then you will refrain from applying a loan, thereby you refrain from purchasing your vehicle. Then what happened? Because of that central bank decision, policy action, your consumption decision got affected, right? Similarly, for the companies, for the businesses as well, if the central bank increased the interest rate, companies might not apply for loans from the banks because at that time, applying for a loan is costlier. Now the interest rates are higher. On the other hand, what happens if the central bank announced that they are going to reduce the interest rate? They are going for an interest rate cut. Then what happens? Then you will be motivated to get a loan, right? Because now getting a loan, taking a loan is beneficial for you. Now the interest rates are lower. So therefore, you will apply for a loan and the banks will let more investment by the companies or the businesses. When the companies decides to borrow more and invest and to expand their production, then what will happen? When the productions are expanded, then it will create more job opportunities. Then what will happen to unemployment? It will get reduced, right? And also, when the unemployment is getting reduced and people have more income with their hand, they will demand more, resulting in a boom in the aggregate demand. It will result an inflationary pressure on the economy. So now you see, this particular central bank announcement, policy rate, increasing or decreasing policy rate, it created an impact on the macroeconomic variables. Inflation, unemployment, production, consumption, investment. So all these macroeconomic variables are affected, influenced by this central bank policy decision. So as a consumer, as an investor, it is very critical for you implication of this monetary policy and their actions on your day-to-day life, your consumption decision, your investment decision. And you will be comparing the monetary policy with other country monetary policy practices, maybe with developed countries, maybe with developing countries. You will identify these are the monetary policy regimes adopted by these countries, whether they have succeeded, whether they have failed. Accordingly, what is the impact on the economy? So this is the focus of this course. So after completing this course, you will be having a thorough understanding about the monetary policy. Under this course, Money and Banking, we are giving you the practical aspect. How actually the central bank use these theories to deal or to implement the monetary policy in the practical aspect. So that is this course all about. Are you clear? All right. Here again, I have extracted few announcements by central bank, but they have done during this COVID-19 pandemic. Again, during this pandemic situation, they have announced that they are going to reduce the policy rates. Accordingly, they have reduced their bank rate, standing lending facility rate, standing deposit facility rate. Don't worry, all these rates will be discussed later in our sessions. What are those rates? For the time being, just remember these rates are reduced by the central bank during the COVID-19 pandemic. Why is that? Because during this challenging situation, our production got disturbed, right? Our economy got stagnated. All the economic activities were disrupted. Because of that, now we are in a stagnated economic condition. Now central bank observe that and they interfere into the market to businesses, investors, and also to the general public by lowering their policy rates. In a recent press release, they emphasized that if the market lending rate is not reduced by the commercial banks or other financial institutions, they might take regulatory actions even. That much powerful central bank is. So the central bank in a crisis situation also, it has a role to situation. So that's why we have to learn this. Not only for a central banker, not only for a banker, but also for a consumer, investor, as a general public. This is the general understanding that we should be having to deal with the economic activities. Why we have to study financial market? First, tell me what's a financial market, William? That's an environment that gives the opportunity to channel the funds from the excess units to the deficit units, right? That's the simple definition of a financial market. So within the financial market, we have subcategories like share market, that means stock market, we have bond market, we have foreign exchange market, right? So all these markets, altogether, the overall financial market is very crucial for an economy. Well-functioning of a financial market is a crucial precondition for a higher economic growth. Why I am saying so? Let's suppose now you have 3 million rupees with you. All right. There you decide to keep it with you in a personal private safe within your home. So is that a productive use? Keeping the money in your home in a personal safe? No, that is unproductive usage of money. Instead of keeping money there, if you decide to invest that 3 million rupees in the bond market, what is bond market? That's a debt security market, right? By selling bonds, corporations and government raise funds for their operations. So purchasing a bond means an investment. So this bond market facilitates you to channel the fund from unproductive usage to the productive usage. Similarly, stock market, that's where the share prices are determined. The companies are raising funds based on their market price, the share price. So based on these raised funds, they invest, right? Similarly, foreign exchange market. What is foreign exchange market? That is where our price of the domestic currency is determined in terms of the foreign currency. Then all our import cost, export revenue, trade balance, balance of payment, surplus or a deficit. All of the things are determined in the foreign exchange market. So now you know why the financial markets are matter to us, right? Understanding financial markets gives the platform to channel the funds from unproductive usage to productive usage. Then we come to the second question. Why study banking and financial institutions? Why? So these banking and financial institutions can be commercial bank, insurance companies, investment banks, mutual funds, financial companies, can be anything. So these are the agents that facilitate this platform, right? If we take these commercial banks, they are the people who provide the platform to connect the deficit units with the excess units by financial intermediation. Without them, we would not be able to conveniently deal in the financial market. So, understanding and studying banking and financial institutions also critical to be an active participant in the financial market. Not only that, final question, why study money and monetary policy? What is money? We say anything that is generally accepted as a medium of payment for goods and services. So that is the simple meaning of money. So what are the functions of money? If we consider the money and its relationship with other economic variables, you may come across there are many significant relationships between money and some of economic variables. For instance, money and inflation. That is the most popular relationship. Always we say too much money in the economy, higher inflation, right? So we observe that higher the inflation rate, always there is a higher money growth also. So the money and inflation, money and interest rate. Not only that, some of economists found that there's a relationship between money and business cycles. So what is a business cycle? That's a fluctuation of the output of an economy during a time period, aggregate output or the GDP. There can be recessions, there can be recoveries. So some of the economists have found that when there is a recession, they have noted there is a decline in the money growth as well. So this decline of money growth has been followed with the recession. So now you see, money and the economic variables are closely interrelated, right? Then finally, the monetary policy. What is monetary policy? As the government is responsible for the fiscal policy, central bank is the party who is responsible for the monetary policy. So basically, central bank conducts monetary policy to control availability of money and the cost of money. Simply, availability of money means the money supply. Cost of money means the interest rate. So in other words, this monetary policy means, students, we are controlling the money supply and the interest rate. So that's what the monetary policy do. So in this course unit, we are going to critically examine these financial markets, banking and financial institution, and especially money and the monetary policy. All right? Okay. Before coming to the central bank, the prepared system in the economy was currency board. Here, the currency board. Right? Because of the weaknesses in the currency board, it is determined to establish a central bank. So who is the founding member of the founding governor of the central bank in Sri Lanka? In 1950, we established the Central Bank of Sri Lanka with the founding governor, John Exton, right? So actually that time we called the Central Bank of Sri Lanka as Central Bank of Ceylon. Now only we mention it as Central Bank of Sri Lanka. So this extra, whenever we refer the history of the central bank, we always refer a report called extra report. Why? Because this is the report that John Exter completed, highlighting or giving the rationale for an establishment of a central bank in Sri Lanka and highlighting the weaknesses of the prevailing currency board at that time and providing the legislation framework for us to establish a central bank. So this is the very perfect, very lengthy report explaining all these. From the extra report, I extracted prominent or key weaknesses of this currency board that made us to select a central bank instead of currency board to going forward. The first one is the higher credit needs of a growing economy. Higher credit needs of a growing economy. So in 1950, we got the independence in 1948. Soon after the independence, there was a very emerging need of the economy to grow, right? We were a growing economy, so we had much more higher credit needs. But the problem with the currency board is they have only authority to issue money. And there was a system with the currency board called 100% reserve requirement. So what is this 100% reserve requirement? That means to issue additional 1 rupee to the economy, we should add extra foreign reserves to our reserve stock, similar worth of that additional 1 rupee. What's that mean? That means our every domestic currency, our all domestic currency should be backed 100% with foreign reserves. So that is the 100% reserve requirement. Clear? That means we cannot just issue money. If we want to issue money, we should have new addition to the foreign reserves as well. So that's the problem. So that is not appropriate for a growing economy, right? And also accumulating these foreign reserves without reinvesting is unproductive. We are just holding the foreign reserves, not investing in them, not using them for the growing needs of the economy. Why that happened? Because of the 100% reserve requirement of the currency board. The second point, again highlight that same problem. Inappropriate reserve maintenance, 100% reserve requirement. So where do we have this, where did we have these reserves? With India, Reserve Bank of India. What is Reserve Bank of India? That's the Central Bank of India. As we say, Central Bank of Sri Lanka, some countries use their own names to refer their central banks. In India, it's Reserve Bank of India, RBI. In USA, United States of America, it's Federal Reserve Bank. Shortly we say Fed. Here, it's CBSL, right? Central Bank of Sri Lanka. So basically, under the currency board, what we did, we maintain our foreign reserves with Reserve Bank of India. Why India? Because it was we had a very long economic relationship with those countries and also economic dependence. Then, most of the time, our reserves are in the form of Indian rupees or sterling pound, right? So both of these currencies, Indian rupees and sterling pounds, are not convertible into gold, right? Because at that time there was heavy exchange controls have been imposed on this sterling pound and Indian rupees. Therefore, because of having a foreign reserve in terms of Indian rupees or sterling with the Reserve Bank of India, it made our foreign reserves very inappropriate. Then third point, adjustment for the future. What that means? At this time, Sri Lanka was seeking the membership of IMF, International Monetary Fund. We should be able to convert our domestic currency into gold or gold convertible currency. But I already told you we had reserves with Indian rupees and sterlings. Both of the currencies are not convertible into gold at that time. That made us to go for a central bank in order to get the membership of the IMF. Then the fourth weaknesses, limited activities of a currency board. That's a very huge issue with the currency board. Why? Because currency board had only the authority to issue money. Then what about bank supervision? What about maintaining financial stability? What about maintaining price stability? No. Currency board was not able to maintain any of these. Why? They got the authority only to issue currency. That's all. So limited activities made to replace the currency board with the central bank. Then the inability to cope with the wider definition of money. That means here under the currency board, they did not have the control on demand deposits. Here, meeting the needs of financial institutions. What's meant by that? That means in a case of a collapse of a financial institution, suppose that one particular commercial bank requires immediate liquidity problem, then currency board was not able to fulfill that liquidity problem. There's no solution with the currency board because they had very limited activity, only to issue money. But under the central bank, we can facilitate fund as a lender of last resort. Always commercial banks or any other financial institutions as a last resort can rely on the central bank. But with the currency board, it was not. Then, inability to tackle crisis situation. Here, at the beginning of the session also, I explained. During this pandemic situation, COVID-19, central bank implemented several actions, right? So they provided relief by reducing the policy rates likewise. But for a currency board, they did not have any instruments to tackle crisis situations. If there are a financial crisis, if there are any pandemic situation or a collapse in the financial system, currency board did not have any option. Finally, lack of instruments to control an inflationary situation. Central bank do have policy instruments. Later we will discuss in detail, like policy rates, open market operations. But for a currency board, they did not. I told you there's a 100% reserve requirement. Payment surplus. If they have balance of payment, then they can add more foreign reserve, then thereby they can issue new money. When they are issuing new money, always there's an inflationary threat to the economy. If that's the case, currency board did not have any precautionary measures because they did not have any instruments. So these are the basic weaknesses that made us to shift for a central bank. So are you clear with that? All right. Now we are focusing to the Central Bank of Sri Lanka. How our central bank emerged. So you can read the vision, mission, and the objectives are given in the slides. I will upload the slides in the LMS. So referring to the objectives of the central bank, you can see that the main two objectives of Central Bank of Sri Lanka. So why we need an economic and price stability? Price stability, that means what? There's no wide fluctuation in the general price level. So this price stability has been taken as a key objective of many central banks around the world. Why? Because price stability is really crucial precondition for an economy for a smooth functioning. What happens if the prices are fluctuating widely? That means there's a wide fluctuation in the general price level of the economy. Then are we certain about the prices? No. The uncertainty is there resulting from the price instability. Then consumers, investors, all these consumption investment decisions are uncertain. They are not sure whether to do that because the prices are unpredictable. Because of that, what happened? Because of that, our economic efficiency will get hampered. So that is price stability. Not only that, financial system stability. What is financial system? Financial system means altogether all the financial agents, financial market, all these financial instruments, all together we call this system a financial system. Financial system stability means this financial system is capable to face external or internal pressures. It is not vulnerable to external or internal shocks. Then people will lose their confidence. Then they will do not engage in the financial activities because they are not certain whether they can trust the financial system within the country. So that's why they have set this economic and price stability and the financial system stability as key objective of the central bank. Then finally, the conduct of monetary policy, rules, goals, and targets. Now I told you the goal or the objective of the central bank is to maintain economic and price stability or to maintain financial stability. Can they directly hit that objective or the goal? It's not feasible because normally to achieve this final objective, they say it might take more than 1 year or 2. That's why we call it monetary transmission mechanism. What is monetary transmission mechanism? That means the period that is taken to achieve the final objective. There's a transmission. The next slide also you can refer the transmission mechanism. For this monetary policy, to conduct the monetary policy, we have to have a set of tools. We call that monetary policy instruments. Here you can see we have policy rate, open market operations, statutory reserve requirement ratio, all other policy instruments. All these tools will be discussed one by one in coming next lectures. So central bank basically use these tools to hit the operating target. Thereby they achieve the intermediary target, then finally the ultimate goal or the objective. I will take an example to elaborate more. Right? Suppose that NASA is sending a spaceship to the moon. Right? Now, do they normally wait until the spaceship landed on the moon to express or to decide whether the mission is successful or not? Is that the practice? No, they are not waiting until the last moment to check whether they have correctly implemented the mission. That's not practical. They step by step monitor whether they are in the right track to land on the moon. Alright? First, they might check whether the spaceship is positioned correctly as it leaves the atmosphere. We can refer it as the operating target. Soon after leaving the atmosphere, they check whether the spaceship is correctly positioned on the path. If not, they can use these policy tools to adjust the thrust a bit to make it into the correct position again. Right? Then next step, after halfway through to the moon, they will again check whether the position is again correct of the spaceship. If not, they will again use the tools to correct it. Then finally they land on the moon. It's not a one way, right? It's not a direct mission. Clear? Similarly, central bank also set operating targets and intermediary targets to achieve the final objective. So let's suppose the final objective is price stability. To achieve these stable prices, central bank determined it's better for us to have 5% inflation rate in next year. Now they decide. Now to achieve this 5% inflation rate, we should maintain 3% growth in the M2 monetary aggregate. This M1, M2, M3 are type of money, right? So they decide to go forward to achieve 5% inflation. We should have 3% growth in the M2 monetary aggregate. Then to get the 3% growth in the monetary aggregate, they have to accelerate the monetary base or increase the monetary base by 2%. For that, they use open market operations. So that's the simple process of conducting the monetary policy transmission. Clear? So it is not a one shot achieving the target objective. Step by step, they adjust it until they cannot wait until the last moment to check whether they are achieving the inflation of 5%. Time to time, they set intermediary targets and they achieve that, and achieving the operating targets and intermediary targets ensure that they are going to achieve the final objective. So that simply means the monetary policy transmission mechanism. Central bank functions. Remember, these are much historical functions of the central bank. If we consider today's central banks, they have much advanced functions compared to these functions. So the first function, bank to the government. What's meant by that? So there, central bank was the last resort for the government as well. And bank to the banks. This was started at the time where banks started to keep deposits with the central bank, thereby making themselves the clients of the central bank. So now we say it's the bank of the banks. It's bank of the government, bank of the banks as well. Lender of last resort. What's that? This is a very critical function by the central bank. In a financial distress situation, that means if there's a financial difficulty or a liquidity problem faced by a financial institution or a commercial bank, then central bank is the last option that they can rely on. So normally the central bank charge a higher interest rate called bank rate. That's a penalty rate to lend this money as a last resort. But without collapsing this financial institution, central bank is there to back that financial institution as the last resort. Then bank supervising. All these functions will be discussed later also in detail. And finally, the conduct of monetary policy. We discuss how they are going to conduct the monetary policy. So all these functions are very theoretical or very primitive historical functions. But if we consider the today context, we can see much more advanced functions that have been implemented by the central bank. So some of the agency functions, they are managing the foreign reserves, they are managing the foreign exchange transactions. Likewise, there are much more advanced functions. So this is the today's session. So today basically we try to introduce what this course is about, right? What is money and banking subject? What are the things that we are going to discuss more and more under this course? So with that, we can wind off the session. So that's all. I hope you enjoyed the session.